Have you ever wondered what experienced property investors would do differently if given another chance? G'day, I'm Aaron Christie David, mortgage broker and founder of Atelier Wealth. I specialize in helping Australian families start out and scale up their investment property portfolios. Look, experienced property investors don't become experienced without enduring a few ups and downs. But if given another chance, there are a few things I could tell you we would all do differently. As a mortgage broker and savvy property investor, I see all types of investors and portfolios, and I've seen a lot of people make mistakes when it comes to investing their money, which is why today we're going to talk about 6 things that you need to avoid if you want your investment portfolio to grow. Before we start though, I just want to preface that this video is general in nature and not intended to give advice. I always suggest chatting to a qualified mortgage broker who can give you the best guidance for your situation. Okay, so for mistake number 1, it's not buying earlier. In fact, I would say that this is the most common regret investors have. Often, investors are talked out of an opportunity by being told prices are still too high or there's a looming crash coming. But many of them only learned that the wrong decision was listening to those opinions in the first place. If you buy before a market boom or buy under market value, you're giving your property time to experience the magic of compounding growth. Coming in at a close second is the regret of not buying more. I often see that once investors start gaining momentum with their portfolio, they also start getting cautious. Of course, having a conservative approach isn't necessarily a bad thing, but being too conservative may mean that you start second guessing yourself and stop acquiring. In hindsight, many investors often regret not buying more when they had the opportunity to. Next on the list of common regrets is buying the wrong type of property. The investor who regrets buying the wrong type of property is the one who bought anything just to get in the market. And yes, any foot in the door is a good one, but you need to make sure that opportunity aligns with your strategy. Because otherwise, what's the point of being in the market in the first place if it's not going to get you to where you need to be? Look, as I said, buying into the market and getting your foot in the door isn't necessarily a bad thing. But these investors typically bought something cheaper due to a minimal deposit and limited borrowing capacity. Other investors who made this fatal mistake bought properties in mining towns or holiday destinations that didn't perform as expected. The 4th common mistake is buying just to get the first home buyer benefits. Investors who have this on their list of regrets bought to clip the ticket on government incentives such as no stamp duty to then live in the property for 6 months before renting that out. Quite often their regret relates to limited capital growth because they'd purchased in a cheaper area. But also, most of the time, investors use all their cash for this first purchase and then limited their ability to buy property number 2. Regret number 5 relates to structuring their investment loan poorly. A lot of investors jump the gun on their loans and don't give much thought to how their loans are set up. This could be detrimental right off the bat because eventually you're going to run out of borrowing capacity. Taking the time to consult an investment savvy mortgage broker could help you unlock extra equity and additional borrowing capacity. But for a lot of investors, by the time they realize they actually had alternative options, they are frustrated and regret not expanding their team earlier. Lastly, investors often regret selling too early or acting on being told that they had to sell. These investors often burn with regret when they think about how much that property that they sold would be worth today. They sold because maybe cash flow was tight, or they were convinced it was the peak of the market and it was a great time to cash in. Or perhaps their bank told them that the only way to increase their borrowing capacity was to sell off an asset. This is where having a team of expert investment advisors on your side could play to your benefit. They'll know your financial situation and your goals and can better advise you on the way to move forward. There's a great saying that you will learn more from mistakes than successes. Thankfully, countless investors have gone on the journey before you and shared their mistakes so you can avoid making them. If you're an investor who has made these mistakes, feel free to leave a comment below to share your experience. And if you're a new investor and keen to avoid future regret, I hope this video and these experiences have been helpful on your journey. Make sure to give us a thumbs up if you found this video helpful and stay tuned for some more property investing tips. We'll see you next time.